Welcome to this week's issue of our Dividend Cafe video. We're excited to be kind of building this out and hoping that you'll use dividendcafe.com as a resource for these videos, for our weekly commentary, and for just kind of ad hoc postings that we're trying to put out, updating you on things happening in the economy with the Federal Reserve, certainly global market conditions, and our overall outlook and perspective on investing right now. This week, we're taping right now in the middle of the day on Thursday, and the market's totally flat on the week, which I will make a couple observations about. Oil is now past $46 a barrel, and so that correlation between oil and stocks has broken apart. And I don't really ever like patting ourselves on the back, because anything we get right is usually offset by something else that we maybe got wrong to some degree. But this was sort of the way we were viewing it. When oil was down in the 20s and in the low 30s, the correlation was so high between the way oil prices and stock prices were moving. And what we wrote and said multiple times is that when oil prices did recover to the high 30s, that those prices would stay correlated up till that level, but then once they got there, the correlation would probably start to break apart a little. So sure enough, this week and last week to some degree, stocks haven't moved a whole lot. They've really had a great April, obviously had a great March, but oil's continued to go higher. And that's a bit of a surprise, but it is healthy, we think, for markets that oil and stocks are not moving directly together. So that's a big takeaway for this week. The other thing we point you to is just earnings season. And while the S&P 500 or the Dow may be reasonably flat on the week, I suspect a lot of people's portfolios are not, because it really will come down to what stocks people have owned. The whole index kind of running in place, but this expression, which is overused a lot but is appropriate right now, it is a stock picker's market. And based on earnings results and how certain companies have performed in Q1 and what they're guiding for the rest of 2016, some companies are moving meaningfully higher. Some good action this week in the defense and aerospace business, some good action in energy. We've had some great things happening there, particularly in some of the MLPs. And then other select companies, some in the technology side, have missed the mark a bit. So it's worth watching. We think that trend will continue, by the way, that it will be divergent results, some companies going higher, some lower. The Thursday morning here today, the GDP numbers came out for Q1, and it was pitiful. And it was expected to be pretty pitiful. It was a little worse than even expected, but the economy grew at 0.5% annualized net of inflation in the first quarter. So to me, I would say that the idea that we're going to be able to get robust revenue growth necessary to create a whole nother wave of the bull market, if the economy is growing at less than 1%, and frankly even less than 2%, is very unlikely. Now, this will be the third year in a row that we've had a pitiful first quarter, and then Q2 and Q3 numbers are likely to pick up. There seems to be some seasonal issues going on there. But the overall U.S. economy is not strong. It's not recessionary, but it's not strong. So we think it's going to be a big theme here throughout the election. We think it'll definitely be a big theme going into 2017 on both a global and U.S. level. But right now, it basically holds the central banks in place. Markets are going to move around individual company performance. Earnings matters, dividends matter. And then from there, the next leg will really depend on where that economic growth will come from. So that's the news for the week. We'd love to hash that out more for you. Future videos, future writings, and feel free to reach out to us anytime. Thanks for listening to Dividend Cafe.